Hi everyone, welcome back. Roy Cuzin's here today with my favorite session. It is, of course, the Forex Portfolio Overview. I should mention this whole program that we're having 2 times a week. Every week we're having market analytics, we're having trading education. This is powered by Liteforex broker. I'm really happy to share with you today my real-time positions, my personal positions. I'm going to share with you not only the positions themselves, but we're going to analyze all of these technical situations just to get our head around whatever's going on from a technical point of view. So should be super interesting. Let's dive in. We'll take a look at the actual positions. Normally I hold between 6 to 8 positions. More often I would hold 6 positions. I will take the lower limit, so to speak, but in some cases there are many strong opportunities, and I don't hold myself from engaging with a 7th position or 8th. In this case I have 7 positions in place. Some of them are running for quite some time. Such as the first one. As you can see, the Australian versus the Canadian dollar, 38 days in the market already. I have been scaling and scaling out all along. It has been a pretty good position. Right now, counting 380 pip, and we're catching it actually going down, going against my direction right now. By the way, as I speak right now, the market is on the move, so we'll get to see that as well in real time. The second position I hold, dollar versus the Canadian, 17 days already. We're getting closer to the price target. I think it's about less than 100 pip right now. Counting 235 pip in profit. Position size is getting bigger, 40%, so that's good. The third position, New Zealand versus the Canadian, you can see there's a theme here. Right, there's a theme of shorting the Canadian dollar, and that's pretty much across all board. Wherever the Canadian dollar is, I find an interesting technical picture suggesting it should get weaker. So as you can see, I've loaded up quite a lot of that short positions on the Canadian, also through the New Zealand versus the Canadian dollar. Ended at 87.15, guys. I'm registering in here almost 500 pip in profit, position size 30%, 31 days in the market. Another one of my favorite 2 positions that I have is the Swiss versus Japanese yen and its twin brother, the Canadian versus Japanese yen. Both are doing fairly well right now, and we'll catch the market right now. It's on the move. These 2 are tanking, so that's, and they're highly correlated to the market, right? They're highly correlated to the stock market. And we're also seeing some negative sentiment coming from Wall Street as well. The last 2 positions are the most disappointing that I have so far. I have the dollar versus the Swiss franc, which I actually expected to get much more from. And I'm pretty disappointed to see prices coming off a little bit. And right now it's just about 10 pip up, which is virtually nothing, and I decided to decrease the position even further because I don't like what I see at the moment over there. And of course, the only position that's in a loss, also quite surprising on the downside, of course, on the negative side, of course, is the euro versus the New Zealand dollar. Maybe I'm a little bit, maybe you can't see, so I can let me show you here. The euro versus the New Zealand dollar. This one was ended just 2 days ago, very fresh, but there was a swift move against my direction, and I haven't even had the chance to increase this position. So it's very small, it's tiny, it's only 10%. However, the pips wise, it's a pretty big loss right now. But since it's just a small position, I don't really carry a small loss on this one at this point, so I'm not too worried about it. But that's pretty much the list. Let's dive in and take it to the chart. Alright guys, so we're going to start with the Australian versus the Canadian dollar. As I've mentioned earlier, it's on the downside right now actually. Now we've entered here at 92.92. This is my entry price, 92.92. Let me mark this right down for you so we can see exactly the entry price. it was roughly here, and the moment was, take a look at this area right here, and I should say particularly this spike right there, because I actually predicted the price will break out of that local system, right, this local trading range, just according to the bigger picture, because the bigger picture here is really profound. It is coming from the monthly chart, and it's pointing out for a strong upside trend. And it started with this massive head and shoulders pattern. Take a look. This was the head and shoulders pattern right at the end of the downside trend, which is also the bottom part of my, my symmetric system, right? Which is a support and resistance system that can point out trading ranges, right? Consolidations. So this is pretty much what I'm always looking for. And when I saw price dipping in, taking the previous lows, I kind of figured out that there might be an upside trend on the larger scale that could go back to the higher section, right? This is the monthly chart. Now we're talking about the mid-high key level. In this case is the major price target where I'm aiming at, which is 10070. So we're still pretty far from that area. But here's where it becomes really interesting, because I was able to pinpoint another trading range that was starting to develop. That was about 2 weeks ago. And I also marked that with a purple system, just like this one, just like the one that I used as trigger to get into this trade. And here's what I found out. Once price broke above that system, right? I'm talking about top key level here, 96.72. These are local systems, guys, right? Just helping me to fine-tune the position management, right? The money management, so to speak, because I like to scale in and when price goes with me, and scale out when price goes against me. And that's what I've done ever since, right off the bat, basically. Starting and just increase the position. Once it saw some downside correction, I started to take profit. So, partial execution. So what happened here was a break above 96.72. I continued to increase the position, but then of course came these 3 negative days, so I pulled back a little bit. I closed earlier trades that I've entered in a much earlier stage, which were profitable. But here's what I found, what I find to be really interesting. You can see that price is knocking on the door of that same 97.72, which was broken just a couple of days ago, right? A few days ago. It already done that yesterday, sending this spike here, basically challenging that level from above, failing, pulling back, and today, as you see right now, this is happening live, we're having a second challenge here on that same very, it was a resistance level up until a few days ago. Right now, it should act as a strong support. I just hope it's going to hold, because if it's going to hold, then I'll see price bounce back and begin to build up, some positive momentum. That would be actually a very important cue to step back in and to increase the position, right? Increase the position, because we're still quite far from our final destination. Alright, so this is the Aussie versus the Canadian. Very interesting technical picture, no doubt. Let me show you another one which I really, really like. This is the dollar versus the Canadian. Right, so the theme today, obviously not today, I'm talking probably for December, because our sessions here, we're having these sessions, by the way, every first Thursday of every month regarding the following month, in this case December. So I think that the theme for December is the Canadian dollar getting smacked heavily, I should say. And here I was really impressed with the technical situation. Everything started when price was on the downside and building up that really impressive head and shoulders pattern. Take a look, that massive head, pretty symmetrical formation, and that happened right on the bottom of an important key level. Let me show you again. The bigger picture here would have to be the monthly chart. Would have to be the monthly chart. So here you can see I'm talking about the black system here representing this particular trading range. It's not very well established. We only have 2 full legs, right? So we're playing out. We're actually playing out right now. We're playing out the third leg right? That's the strategy here. Now, I haven't started it from the very bottom. Actually, I used that, take a look, I used that, you know, at first price broke above the 27.74. That was an important moment. But then I saw that spike here, right on top of that key level. That was an important moment. I knew that that level had been broken and probably price would just continue straight up. So this is where I became very much interested in having a bullish position on the dollar versus the Canadian. But very recently, just 2 months ago, price had made a strong downside correction, and guess where it landed? Right on the mid-low key level 27.74, this time from above. Well, this time I should say this is the second time it does that, right? So that's a retest, and obviously complete turnaround with lots of positive momentum. And I feel that it's going to go straight to the mid-high key level 34.78, which is my official price target. So this is the big picture, right? The big picture suggests price should move forward. And you know what? Let me say this. Just according to the nature of the low, right, where it came from. Because if you think about it, it took the previous low by a pretty big margin, both in time and price. So it's probably going to do the same on the upside, which means I suspect it's going to take the 34.78, sorry, which is my official price target. There's a good chance it's going to crash that level and continue straight to the previous high, 37.90. I should only hope that I'll be able to capitalize on that move as well. I'm going to consider it that move. I'm going to consider as a separate bullish campaign, which I'm going to reignite once I see that price can prove that it surpassed that, it overcame that 34.78. I should also expect a confirmation coming from the weekly close, at least the daily close, but we'll see how that goes. I'm going to go back to the daily chart again. Here's what I found out quite interesting. Yesterday, I was looking at this particular local system, this blue system, right, representing the very short-term perspective. And I found out that there was, I found that out about a week ago, that there was a lower scale sideways movement starting to develop, right? It's pretty obvious. Let me just mark it down for you. So it's clear. There you go. Second, third, fourth, right? And, you know, I definitely believe in the long run and the bullish long run here on the dollar versus the Canadian, meaning the American dollar is going to get much stronger. But I was also very much aware of this sideways movement taking place on the very short-term perspective. But yesterday was quite interesting, where price made it above the top key level, 33.50. Take a look at that, right? So that's actually quite important. I think that's a strong indication that price is breaking out of that system, although we definitely want to have some further, we want to have a second close today, obviously above that 33.50. We want to have price basing itself above that level, eventually closing the weekly bar above that level. That would be a full confirmation. All I can say is that we're getting pretty close to the price target at 34.78. Once I knock out this level, I'm going to pull out and wait on the sideline for a couple of days to see if price can actually continue straight forward from this point on. Alright, this is the dollar versus the Canadian. Interesting stuff. Here's another Canadian for you guys. Like I said, short on the Canadian, also through the Japanese yen. I really like this one, guys. And let me say this. Don't miss out. Do not miss out on our training educational session next week, because I'm going to present this one, which is a live position that I have as we speak right now. I'm having 40% position size. It's getting bigger, and there's still quite a long way to go to the official price target. But I'm going to use this one as a case study to show you one of the most amazing trading techniques that I have mastered over the last 10 years or so. I'm going to give you a hint. I don't want to spoil it, but I'm going to give you a hint. It's about gaps. right? I'm going to give you a different angle on gaps, one that you have ever, I doubt that you've ever encountered, right? I'm going to help you to dominate this area of gaps, and I'm going to weed out most of the noise, because there's lots of noise relating to gaps. So that's going to be super interesting. That's going to be next week, which means the 13th of December. All right, don't miss out on that. Anyway, let's go back again. I'm not going to talk about right now about that exhaustion gap that that helped me to get into this trade, but what I will talk about is the general technical picture. You can look at the weekly chart right now. It's we're having the big setup, right? The big setup. Obviously, that's the black one, right? Talk about the black, the 4 lines, right? This is all this is what it's all about. This is all about a predictive system, which is basically just a reliable support and resistance system. In this case, we have 2. It happens. We have the big one, the black, and we have the blue one, which is the smaller scale. Still a big one though. But I'm mostly focusing on the blue one, right? I mean, obviously I would like to have both of them in line. It's actually a condition. Alright, so I do want to have a bearish conviction stemming from the black system, and coupled with the same kind of conviction coming from the lower scale setup. In this case, this is the blue system. This is exactly what we had here probably about 2 months ago. 2 months ago, I noticed that price was starting to build up a second lower scale sideways movement, because I noticed that first leg here, second leg was just slightly touching the mid-low key level, but it was enough, and then straight to the top key level, and that was a very significant moment, right? The reaction was so obvious on that 88.64. I knew that I'm probably looking at the next downside leg, which would be the 4th leg if you look at the blue system, right? And this is pretty, like I said, this is what I'm focusing at. But also think about it. If you take a look at the bigger picture, right? We're talking about the first leg here. Well, this is the major trend. Every single leg here would be the major trend, not the medium-term trend like in the blue system. Here, we're talking about the major trend. We had already 2nd, 3rd leg, and 4th leg, right? So basically, this is also the 5th leg of the black system. It's both the 5th leg with the blue and the black. So that's what I'm talking about when I'm saying perfectly in line with each other. That's exactly the case. It just makes it a lot stronger in terms of probability to success, right? That's I love it when I have a second setup. I can also have a third setup coming from the daily perspective, right? The execution time frame, which in my case it is the daily chart. Now you're joining me in to this really massive downside move that's taken place in the market. It's a complete meltdown almost to that point. Looking at the Canadian Japanese yen here, I'm just I'm very glad. I'm very happy to see this, obviously. Well, like I said, this is the bigger picture, points out to downwards, but here's where the moment of engagement was, for me at least. I'm going to close in a little bit. It was that trigger level from 85.54. That's the mid-high key level of the blue system. I noticed that it got broken. It was 2 weeks ago with that bar, as you can see, closing below that level. I didn't get in yet. It wasn't enough for me to get in. I needed something more concrete. And then I saw that spike here. Take a look at this. This is beautiful stuff, right? It's already, it's marked by that, square, yellowish square here. Take a look at that spike there. So what that proved to me, that was price was acknowledging that level as a strong ceiling, if you will, right? Strong resistance. It just failed to break through. And this is on a weekly scale, right? It came back, closed the weekly bar, which is a very high authority confirmation factor. And that was enough for me to take massive action. So I got in. I got in even though price went straight to the other direction in the first couple of days. First day or second day maybe. It was actually gapping above that level. But like I said, I'm going to talk about it in our next training educational session. Should be interesting. Anyway, that was the technical situation. We're aiming at 82.49, right? And then the next one very close to it, 82.08. These are the two main key levels I'm aiming at. Mostly 82.08, the lower one. All right, let's move on to the next position. All right, in this case, I'm going to start with the lousiest position in place. Right? This is the worst position right now. Like I said, I have a tiny position, just the first portion, if you will, just 10% of my my full position size. So it doesn't hurt me too bad. However, I am quite disappointed with what I'm seeing right now. I was expecting price to easily break below this particular, well, first of all, reach. I mean, let's start from the beginning. I was expecting price to take the previous low, which it did, right? I actually had a massive profit on this one because I was able to slide pretty much all the way through the very top and to the previous major low. I had a massive profit here in two campaigns, packing about 1,000 pip, pretty much. But you know, I thought that I can take a third campaign, bearish campaign, because I actually believe that price in this case will continue to break below 62.91. I think it's gonna say goodbye to this black system and to this trading range and just basically reverse the major move. Right, because if you think about it, the major move had come from below. It was a long time ago, right? But this is the big picture. It came from below, entered a sideways movement, which is basically a consolidation phase. And right now, I thought, well, it might still happen, of course. I thought price is more likely to break out on the downside. This is the fifth leg, and I decided to take up on this one prematurely, because it is still actually on my market watch list, with the official trigger being 62.91. That's the official trigger. Because I can start very small, I decided to take a premature position, a bearish position. Right now, obviously, it's not doing very well, but we should see how things will unfold here as well. The Swiss versus the Japanese yen, that's also one of my favorites. You know, it's very similar to the Canadian versus the Japanese yen, very similar, both from the bigger picture. We're having a pretty solid symmetric setup here, depicting a very wide trading range. Look how wide it is. I mean, think about it. This massive sideways movement, believe it or not, had started back at 2016, pretty much the last part of it. So we're talking about, 2 years, right? 2 years of massive sideways movement with every leg representing, I would say, probably the major trend, right? Probably the medium to major trend, I should say. We already have pretty well established first leg, second leg, third leg, fourth leg. I believe we are right in the middle of constructing the fifth leg. Basically from coast to coast. We're landing from the very top, from the very edge of the setup after touching base on the top key level 117.31. We've made it halfway through already, right? Straight to the middle of the range. Then what happened here was quite interesting. It was an upside correction, which is typical. Obviously, the correction was the move was correcting the previous downside segment, which I believe to be the first segment on this downside leg. So we had a strong downside segment followed by an upside correction, but take a look at this. This is where it becomes fascinating. I was sitting here waiting with my key level here, my mid-high key level 113.62. I wanted to see whether it's going to hold I was pretty convinced that I should not panic about the fact that price is going upwards, but I can actually use this one as and leverage the technical picture in order to establish a bearish position. So what happened was that I've entered a bit prematurely, but then of course, because I actually entered right here, take a look. And I entered here because I saw the reaction on that same very level, 113.62. But then came a strong move on the upside, so I quickly got out with a very minimal damage. But as the week progressed, I actually saw price begin to come back off again. And when it started to reveal, the early stages of the spike starting to form, I kind of sensed that by the end of the week it's going to land below that key level, and it did. So that was a massive cue for me to establish that bearish position, which I did. Unfortunately, the daily movements here, let's take a look at the daily chart. It's a bit volatile. So I started on the downside, I started to build up a bearish position, meaning I started to increase the position. But then I saw yesterday a strong move on the upside, so I took out about half of the position with a small profit. However, as you can see today, we're back on the downside again. So by the end of this day, I'm probably going to re-increase the position again. We're having a long way to go. Our price target 109.50, that's a pretty long way to go, 350 pip. So it should be an interesting journey on the way down. Hopefully we'll get there quick. Let's have a look at our sixth position. That has to be the dollar Swiss franc. As I've mentioned, a bit disappointing at this stage. I was expecting a much more intense move on the way up. Now you can actually see that I have my system, my symmetric setup right here on the local price section. Let's call it local price section. This is the daily chart, and we're looking at a very kind of local trading range, where this is the first leg here, second, third, and so forth. But here's what's really interesting here is on the way down, it seemingly broke a little bit below 99.37, right? Just a bit of a close below, nothing serious. Obviously, I had to filter it out with the weekly close, and I saw only spikes on that 99.37. I knew that this setup is fully intact actually. And according to the bigger picture, well, let me say this: we've entered the twilight zone, so to speak. Twilight zone, I like to call it. It's the riskiest part of the move, the expected move. Now let me talk about the expected move, and I'm going to dial it back to the beginning. The beginning was this. This is the monthly chart. This is the Crude chart, which is the biggest time frame I can find here, monthly chart. But this is where the setup is coming from. So when price was landing on the bottom key level at 92.34 and beginning to turn around, this is where I kind of sense that we're looking at probably a shift in the grand trend. This is the grand trend. And this is where I became interested in the dollar Swiss franc only from the upside, right? Now I still had to have a second setup, a much lower scale setup, so I can fine-tune and fine-tune the entry and the exits and all of that sort of an execution setup, if you will. But the very fact that price had very recently, we're talking about a few months ago, came from above after it made its way towards the upper section, in the middle of the way, take a look right here, it began a strong downside correction. Actually, it was a prolonged downside correction. It took about 5 months to accomplish. But, astoundingly enough, it went straight to the mid-low key level at 96.51, and take a look at this wonderful touchdown. Now that was the key moment here when I began to go all in on the dollar Swiss on the way up. You probably remember that this one because probably about 2 months ago I actually published one of the sessions that we had one of the market analytics sessions was all about the dollar Swiss franc when it was still very, very low. Anyway, I was aiming at 10118 because that's the next major key level, and guess what? It actually reached that level just about a couple of weeks ago. Let's take it to the daily chart again. So we reached that level about, like I said, a couple of weeks ago, and started to enter this trading range, which is local, right? But I thought, you know, I said that this is the twilight zone because it had reached the very minimum level required. From this point on, if it's going to break that 101.18, it's probably going to take the previous low. And I thought it's more likely to do so. It's more likely to continue on the way up and take the previous low. But I had been very cautious, yet this is going to be the third bullish campaign. This is the third bullish campaign I'm having on the dollar Swiss franc, straight, pretty much straight, back to back. So what I want to see here, like I said early in this session, I'm a bit disappointed here because I expected price to break above the mid-low key level of this local system, 96. I was expecting price to crash that level on the way up, but take a look at all of these failures, right? And price is even pointing out downwards right now. So I took out half of the position and left a tiny position in place, the smallest possible, because I'm a bit concerned at this point. However, anything can happen. If price will show resilience in moving back up again, obviously I will go back to increase the position accordingly, of course. Yeah, so this was the sixth one. Let me show you the seventh and last one, the New Zealand versus the Canadian, another version of the Canadian dollar, right? As I've said, massive short on the Canadian dollar. Just happens to be honest. It's not something I planned. It's something that the charts are just screaming for me to take notice of, which I did, obviously. Anyway, we're doing very well here. This is the best position I have in place, guys. I think it's about 480 pip right now, getting closer to 500 pip, and I've been scaling in and out of this like crazy ever since the beginning, pretty much. And you know, the beginning was also quite interesting. You also see that one of our repeating theme here is the head and shoulders pattern, right? It's not only the Canadian dollar, it's also the head and shoulders pattern here. Happens to appear in all of the Canadian pairs that we have, right, in place. So this was the head and shoulders, left shoulder, pretty distinctive head, and right shoulder, nice formation, I should say, tilted a little bit to the downside. But obviously this is an inverse head and shoulders pattern, suggesting that the downside trend that we had so far should come to an end, replaced by a new upside trend. This is the basic interpretation of this pattern. It's a reversal pattern. But what I like to do is to combine that pattern, because it's not too reliable as a standalone trading technique. But when you back it up with a strong, reliable, support and resistance system such as the one I use, the C-matrix here, then it becomes extremely powerful. Because what happened here was the fact that the head, just the tip of the head, happened to collide with a very important key level, the 83.65. This is a natural C-matrix key level. Let me show you where this one is coming from, by the way. I will have to switch, of course, to the bigger picture. This is the monthly chart. This is the New Zealand versus the Canadian. I'm going to give you a couple of seconds to evaluate what you're looking at. You should be impressed, right? I mean, this one is one of the oldest. This is an ancient one. One of the oldest trading ranges in the market right now. This one goes back all the way to 2013. All right, 5 years of sideways movement, guys. This is really good stuff. However, What's really interesting for me at this point was the fact that price came from below, not only from below, from the very edge of the bottom key level. That's what happened last. So it came from below after touching base on the bottom key level, turning around. This looked to me as a strong bullish opportunity with the potential to go back up, visiting the higher section again, starting with a level of 94.067, which happens to be my official price target. So that was a hell of a move so far. Really, really nice journey on the way up. Almost 500 pips. You can calculate where I've entered. It was by a lot of I used the assistance of the head and shoulders pattern to show me the way, so to speak, and get me in a nice position right after it broke. But that's history. Ever since then, price continued on the way up, and it broke above the 88.56, which was important for us. That was an important milestone. You can see how it broke it at first. Then it kind of checked it out from above for a couple of days, and boom, continued to move away from it. Later on, we saw another interesting engagement with the 200 daily moving average, which also provided the necessary support for price just to continue on the way up. So we really, really like what we see so far. Latest update here was the fact that it was able to break a local resistance level, the 91.37. It was having difficulties at the beginning, but 2 days ago it began to move away from it, so it looks good so far. We're still pretty far from our final destination at 94.07. We're talking about 210-15 pip to go, but that's pretty much the situation. So yeah, there you go, all 7 positions right there. Obviously, some of them are old, some of them are new, or newer, I should say, but all of which, as you can see, has lots of potential still, even from this point on. But we're taking the stance. We're taking the stance of bearishness, right? Bearish outlook on the stock market in general, which means Wall Street and the rest of the market, the rest of the major indices, which relates to our positions, short positions on the Canadian versus the Japanese yen and the Swiss versus the Japanese yen. We're also taking a stance, a bullish stance on the US dollar, especially against the Canadian dollar, right? So these are the fundamental aspects of my Forex portfolio for today, as of today, 6th of December 2018. I really hope you enjoyed the session. I sure did. And be sure to subscribe to the channel, and we'll see you in the next session, no doubt. So till next time, be well.